This will be funny if it takes
Now,
off.
now is it actually recording?
What are we calling this show series?
Why invest in real estate? Let me start that again. It's too much eye work. Why invest in real estate is a question I hear a ton. You might hear, Chris probably hears, hey, I can go buy into a low-cost index fund, let my money sit, not think about it. The list is long for why to invest in real estate. And we're going to talk about 5 things today. Those things are tax benefits, appreciation, cash flow, diversification, and leverage. And so let's kick it off with diversification.
Great reason to get into real estate. You don't want to put all your eggs in one basket. There's a 0% chance you will pick the perfect basket to put all your eggs in. Spreading your investments out across different asset classes will help ultimately reduce the risk of your portfolio. And so when you're looking at the US stock market, great, go buy those low-cost index funds. You probably already have some through your 401k and IRA. So you might have a little more in stocks than you already think. And there's not a direct correlation between stocks and US real estate. There is some, but if you look back, for example, at the tech bubble, those high-flying tech stocks, they tanked 70-80%. US real estate did not. And so if all your cash was invested in there, you were not diversified, you probably lost a huge chunk of your cash. And so that's kind of a simple one. You're going to reduce your downside risk by diversifying into real estate. Now, a little bit more fun, how do you make some money with it?
Appreciation. I think everybody likes when things appreciate, and properties generally go up in value. Historically, they have over time. You'll see dips, but it'll come back. And so if you're in it for the long haul, appreciation is a no-brainer. You don't have to do any additional work. That property value is just going up. How fast it goes up, how much it goes up can depend on your marketplace. But for us out here in Los Angeles, it's unbelievable how every year we think, never thought this would cost that, and then it does.
In New York too for the past 100 years.
Yeah, and it just, even in times of our higher interest rates right now, the appreciation has slowed, hasn't stopped.
Still happening.
So, appreciation is a low effort, great way to make more money.
Leverage can be a double-edged sword. Leverage is essentially borrowing money to buy assets. You can get yourself in trouble with leverage, so always be cautious with this. But let's go back to those low-cost index funds. You have $200,000 you want to invest. If you go to buy those low-cost index funds, you're going to buy $200,000 worth of stock. Let's say you get a little riskier, you set up a margin account. That means the brokerage is loaning you money. Generally 50%, yeah, this is the fun stuff. Generally, 50% leverage is the most you will get at a brokerage account. Now you're buying $300,000 worth of stock. Take that $200K and go buy real estate with Dan.
It sounds better.
It's a better investment. You're going to take that $200K and buy $1 million asset. Just using the basic 20% down payment rule, you can get away with less down payment on different types of projects. But let's just go with the standard. You're buying $1 million asset. So you're using $200,000 to control $1 million asset. That's where the leverage comes into play versus just having your $200,000 to $300,000 of stock with your investment account.
And then there's cash flow.
Yep.
So, okay, you've bought that property, now you're renting it out. The rent is hopefully going to yield you a monthly return. And that's because you've taken the risk, you've put out the money, you bought the thing that somebody else didn't want to take the money to buy, but they'll rent it from you for a higher cost per month because they didn't have to shell out the $200,000 because they couldn't or didn't want to or didn't see the value in it. So now you've got some positive cash flow. And as these things appreciate, you can further leverage that by refinancing, pulling out additional money, creating additional revenue streams that help to kind of get you out of a 9-to-5 situation.
People always use that positive cash flow, and if you can build enough of it, you can tell your boss to take a hike at your day job, which is a great option. The final piece is the tax benefits, and I will say from the start, we are not tax advisors, we are not lawyers, we don't play them on the internet, we never want to be one. So always talk with your local professional that you work with to find out what the best answer is for your situation. but tax benefits are a huge piece of real estate investing. You can use mortgage interest rate deduction to reduce your taxable income. Depreciation, it's just a fancy word for reducing the value of an asset over time. Again, you can depreciate your income producing properties to reduce your taxable income.
A lot of big words.
More cash in your pocket.
Yeah.
And then finally, and this isn't the last one by any stretch, but a 1031 exchange is another common one you will hear about, which is simply buying a like property.
Yeah, that's something that we use regularly when we're flipping. You know, if we're reinvesting our money into something else, we're buying something that's more expensive. It helps us avoid paying, you know, taxable gain, and we shift it over to something new. So again, like Chris said, I'm not even going to pretend to be an accountant. Get yourself a good one, but we know we have benefited from tax benefits.
The longer you can delay paying taxes, always the better. There's tax credits for things like low-income housing, historic properties. Spend some time researching. Your area may have specific ones for your state, for your city. A lot of different benefits out there. But digging into these can make you a lot of money in the long run. And you know, each one of these benefits could be an hour-long video talking in detail about them. But just at a high level, some of the benefits with this real estate investing, you're going to get the diversification, appreciation, leverage, cash flow, tax benefits. All of these are reasons to take a look at investing in real estate.
Yeah, those are 5 great reasons. And I think if you liked any of them, just click subscribe, click like, throw a comment below, boost our engagement. We'll come back and we'll give you some more information.